It's the Larry Kudlow Show. Free market prosperity starts here. Now, here's Larry Kudlow.
Welcome back, folks. I'm Larry Kudlow. By the way, you can live stream us on the internet. LarryKudlowShow.com, LarryKudlowShow.com. You hear it everywhere, all across the country, around the world, and throughout the solar system and the Milky Way. And during the week, please join us on fabulous Fox Business Network. The name of the show is Kudlow, every day, Monday through Friday at 4 p.m. Eastern Time. And if you can't make it at 4, why, text your favorite 9-year-old, and she will show you how to DVR the show. Okay, we had a wild and willy stock market. That's how I'm going to describe it. I think it was up 600 or 700 points on Wednesday, or no, down 600 or 700 points on Wednesday, and then up 600 points on Friday. For the week, the Dow was up 300 points. The NASDAQ was down 369. The S&P 500 down 46 points. So we got a lot to talk about. We're going to bring in Dave Bahnsen, Bahnsen Group CEO, founder, and manager, and head guru. His latest book is Full-Time Work and the Meaning of Life. It's a wonderful book. And Jack Bouroudjian, chairman of SmartX Data, all the way from Chicago. All right, gentlemen. David Bahnsen, you know, I skim the Dividend Cafe. I can't say I read every word every day, but I do skim it. Do my best because of my love. And you had a headline there that the stock market is nonpartisan. And you know what? I actually agree with that. I think you got that one right. But I do think the market worries, or the market looks at what the policies of candidates would be, whether they're, lower corporate taxes is better for stocks than higher corporate taxes, just for one example. But at the moment, I don't think the market, or probably anybody else, can figure out this election. So I think you basically got that story right. All right. Does that have anything to do with the volatility we saw this week of, some very bad days and then some very good days? What do you think?
Well, first of all, Larry, I want to thank you that you skim the Dividend Cafe every now and then, because I want to tell you that I skim your show every day on Fox Business as well.
Touche. You can't skim a TV show. You either watch it or not.
This is true. And it is the best show on business television, as you have been for many years.
Thank you.
Look, politics affect policy, and policy affects markets. But to your point, there is no market actor right now that could price into asset prices what is going to happen with something like corporate tax rates. And I would say the same is true if we knew who was going to win the presidency, because then you still have to figure out who's going to take the Senate, the House. There is so much complexity in the way this goes on. And I have said many times, when we look at the really robust returns the market got during the Obama years, the really robust returns during the Clinton years, and then you've had situations where there's been divided government with Reagan and Tip O'Neill, with Clinton and Gingrich, with Obama and Boehner. Markets have done best in those environments. I believe right now it's advantage Trump, but it's going to be a close election. I also believe the Republicans look like they're going to lose most of the Senate races that they could win. I still think they're going to get 51, but I don't think they're going to get 53 or 54. And so when all said and done, the market volatility this last few weeks, the bond market hasn't moved. Commodities haven't moved.
Right.
The dollar hasn't moved. So I don't think it is political. I think it's mostly NASDAQ valuations that are just experiencing high volatility when you have a bubble.
Oh, I think that's good. And I do still believe profits are the mother's milk of stocks. And when I go back to the Wednesday sell-off, you had some bad profit reports from some of the big techie companies. And I think that probably really hurt. But then markets came back yesterday I guess there was other sectors had better profit reports. So that complicated. And I do remember, we'll get to Jack in just a second, but I remember going back many years ago with Reagan. Everybody knew that Reagan was pro-business and wanted to cut taxes. And eventually he did. However, the fact remains he inherited Carter's high inflation recession, and you didn't get a good market from Reagan's first, 1.5 years. Then finally, toward the end of 1982, when Volcker lowered interest rates, the market took off, and it took off. It was up 12-fold during the Reagan years, but it took a while for that to materialize. So people who say, politics explains every move, I agree with you, and I don't agree with that. But the question is, Jack Bouroudjian, what are you thinking about the political impact of the stock market?
Well, I think that there are two different animals right now. I think that what we've experienced over the course of the last couple of weeks in the market is what we would call a strategic asset allocation. We have seen people taking money out of certain sectors, namely the Magnificent Seven, the NASDAQ, which we've seen go down 8.5%. And you saw the Magnificent Seven go down around 10%. The S&P almost textbook corrected 5%. And we saw where the money went. It went into small caps. It went into bonds. It went into commodities. So, we're seeing this rebalancing, and it's taken place at one of the slowest times of the year. That's why it's leaving such a large footprint. But going back to the politics of this all, and look, you're talking to somebody who came, I came politically aware during the dark days of Jimmy Carter, right? And I was one of those young Reagan Republicans in college that realized what was happening. And there's nothing out there that compares to what we're talking about. When we're talking about tax cuts, deregulation, sensible tax trade policies, these are things that are prosperity creators. I think that we can't discount that, Larry. All right, and I know that the market right now, you might say it's a toss-up, but that's not what the predict markets say. That's not what the markets, here in Chicago are telling you. That's not what the markets in New York are telling you. They're telling you that these markets are going to go up for other reasons. Now, we talk about how well they did during Democratic administrations. Well, remember, the Democrats also debased currency at record paces. And all we saw were these companies basically keeping up, and the profits kept up with it. But the debasement of that currency needs to stop. That's one of the reasons we've seen such a big decoupling between Main Street and Wall Street. Under President Trump, they went up together. And now, under Biden, we're seeing this decoupling. They are going in opposite directions. And that's a primary function of debasement. So, in our minds, and those of us that are trading these markets on a daily basis, what we see happening, what we see in front of us, where the puck is going to lead us to a doubling of the S&P within the next decade.
Wow, doubling. The Kudlow Trust likes that because I'm always long the index. By the way, you talk about small caps. By far, the best performer this past week was the Russell 2000, which was up 3.5% for the week. The Dow was flat, up 0.7. The Nas fell 2%. And the S&P 500 fell almost 1%. But the Russell was booming, and in fact, the S&P 600 also is up nearly 2%. So that's true. Dave Bahnsen, is this a new trend, the small cap story?
Well, first of all, I just want to point out, Bill Clinton was a strong dollar president. Okay, Reagan and Clinton, Republican, Democrat, both were not debasing currency. They were strong dollar guys, but I certainly agree that what you've had in the last 25 years is with a Republican administration with Bush and then a Democrat with Obama is a very different outlook on the dollar. And I think that even with the Trump outlook, there's question as to how committed he is to strong dollar. But I think he is. I think he talks in a negotiating kind of way, which I understand. Mm-hmm. But I agree that we want both strong corporate profits that are rooted to a stable currency. That is a necessity for prosperity. But the small cap question, Larry, is one of reversion to the mean. That relationship between small cap and big cap growth was so distorted, it was completely inevitable. The only thing I'd say is the big rally in small cap, and by the way, there's been 2 days in the last 2 weeks where the delta between small cap and NASDAQ, how they performed in one day, was the largest in history. Okay, over 5% move between small cap and NASDAQ twice in one single day in the last 2 weeks. That's how mispriced these things are, how overpriced certain NASDAQ names are, and underpriced Russell. The only thing I'd tell you, Larry, is it was not the best performing sector because David Bahnsen's dividend growth was the best performing sector.
Oh, dividend stocks. Oh, well, I like
huge reversion to the mean with dividend payers, yes.
Dividend payers, of the dividend payers, let me just ask, this is definitional. Are these large companies in the main? Are these S&P 500 companies? In other words, when you say dividend payers, who are they? What are they?
Yeah, I mean, in our portfolio, we're agnostic about the capitalization. So we have some small cap names that are dividend growers, but of the bulk of these companies that are mature enough to stably grow in dividend are usually larger cap names. But you've had some just monumental moves with some financial companies, with banks, with consumer staples, and then with energy. And energy is a sector that is so solid fundamentally and has the potential of benefiting with some of the political stuff. That's a great story there.
Actually, the bank stocks are up 2.6%, so you're right. It was a nice week. All right, gentlemen, we're going to take a quick break. Folks, we're talking to David Bahnsen of the Bahnsen Group and his book, Full-Time Work and the Meaning of Life, and Jack Bouroudjian, chairman of SmartX Data. I'm Kudlow. I'll be right back.
This is the Larry Kudlow Show.
When you need mealtime inspiration, it's worth shopping Kroger, where you'll find over 30,000 mouth-watering choices that excite your inner foodie. And no matter what tasty choice you make, you'll enjoy our everyday low prices, plus extra ways to save, like digital coupons worth over $600 each week. You can also save up to $1 off per gallon at the pump with fuel points. More savings and more inspiring flavors make shopping Kroger worth it every time. Kroger, fresh for everyone. Fuel restrictions apply.
Now, back to the Larry Kudlow Show.
We're talking stocks with David Bahnsen, Bahnsen Group CIO, founder, managing partner, author of the DividendCafe.com. His book is Full-Time Work and the Meaning of Life. And Jack Bouroudjian, chairman of SmartX Data. Jack, little rundown of commodities here. I'm seeing weakness across the board. Oil prices down quite a bit. Crude, Texas crude dropped under $80. Brent crude really fell a lot. That's just a little bit over $80. The spread is very narrow there. But also, Dr. Copper is lost 3%. The CRB futures rally, that thing has cooled off quite a bit. And the gold rally has sort of cooled off quite a bit. So commodities look a lot weaker than they did a month ago, Jack. What do you make of that?
Yeah, and you didn't even mention nat gas now being under $2. All of this is actually good for the market. These are fundamentally good things as long as they stay stable. I think the environment needs to be stable. That's the key word. Disinflationary pressure is okay. Deflation could be a problem. And I think that's really what we need to pay attention to.
I think the country. Can I just interrupt? I think right now the country could use a little deflation. Consumers, households, middle-class wage earners who have lost money because of the Biden inflation. The inflation rate has slowed, but the level of prices is still up 20%. It's a long tail. It's hurting everybody. What would be wrong with a little bit of deflation?
Well, we're starting to see it. Look at real estate. I mean, real estate has got three legs. It's got existing home sales, new home sales, and commercial real estate. Two of the three of those are showing strains. So, there are things underneath that are bubbling under the surface that tells us that we're going to see a correction, a reversion to the mean. But the reality is that, right, and that's going to be painful. Let's face it, it's not an easy thing to go through. But disinflationary pressure in and of itself is something that we can live live with.
Yeah.
When you start to see deflation, the problem with that, Larry, and you and I know this, is that we start to see havoc with inventories. And it really starts to play into the problems of the supply chain, and we have to be very careful about that. And that's when we can start to see things seize up. But disinflationary pressure is precisely what the Fed wants and what the economy would need in order for it to continue doing what it's doing.
Well, it's also interesting, as David Bahnsen pointed out, the bond market really hasn't moved. I mean, it's the 10 years in a range, call it 420 to 475 or 420 to 450. 2-year notes a little softer. I think the market expects the Fed to cut their target rate. I don't know that that's going to happen or not. But Dave Bahnsen, let's. I know you're a big advocate of Bitcoin and crypto, right? So I want you to meet Donald Trump, who has now become the advocate of Bitcoin and crypto. And actually, his running mate, J.D. Vance, is an even bigger advocate of crypto currencies. What do you make of that?
I think that they're running for president of the United States, and you want every vote you can get. And if you got to go, look, my anti-crypto stance is not that I want government regulating it per se, and that's what Trump means by being pro-crypto, is he would like to have a friendlier market disposition. I assure you that David Bahnsen's view of this is going to play out without the help of the government. People have a very funny way of not being tolerant of pyramid schemes and Ponzi schemes and grift and corruption forever. I don't think that this is going to last forever, but along the way, I'm all for speculators making money and losing money as long as they bear the risk. And to the extent that right now people can come up with a theory of the case as to how it is becoming a substitute medium of exchange when it goes up and down $20,000 every couple of weeks, I would love to understand it.
Every couple hours.
I'm with Trump and Vance on it, though.
Every
I don't
couple
think
hours.
we need a whole bunch. Exactly.
So
I don't think we need a lot of regulation.
Bitcoin, $67,450, up 59% on the year to date, 59%. Gotta love that. I think, Jack Bouroudjian, I basically agree with what Dave Bahnsen just said, but I think what Trump really opposes is central bank digital currency. He does not want the Fed to run the world. That's what he's really saying.
No, I agree with that 100%. And as a matter of fact, I think that David is spot on with his analysis. I think, either it's going to go to $1 million or it can go down to zero. I don't know. I honestly don't care. I do think that the technology behind it is important. I think Bitcoin is on that blockchain technology, which can be used for a lot of different things. Keeping and maintaining the provenance of data, for example, is essential. And there are things like that we can use it for. It's a great tool. But other than that, I don't see the future.
Thank you, gentlemen. David Bahnsen and Jack Bouroudjian. Terrific discussion. Folks, stick around. Money and Politics next up with Liz Peek and Steve Moore. I'm Kudlow. Be right back.